Hi guys, and welcome to our 10th video of our Day Trading Explained series. In this video we want to press on and now start talking about intraday patterns and pressing the button, buying, selling, making the decision that makes us day traders, which is buying or selling based on an intraday pattern. In our previous video we discussed the power of the S&P 500 and we talked about the importance of leading ETFs, and let's assume that right now the timing is 1 p.m. in the afternoon. The market is trending higher. We have a list here. You can see the list in front of your face. Long screen, that's the name of the list, and on this list we have a number of stocks, 16 matches found that basically are telling us that they are all above the price of $10. The change in the, hold on a second, let me actually point it to you. Price is above $10. The change in price is more than 5%, so that's evidently strength. Or if the market is up 0.75, each one of these stocks is up more than 5%, and some of them are up 21%, others are up 16%, others are up 100%, and so forth. The volume is at least 5 million shares. So that's very important to us as day traders. We want to see a lot of volume. Most of the time a lot of volume translates into institutional traders participating, and it's super important for day traders. We want to join those big fish that are buying and they're not looking at selling 5% above or 10% above their entry. They're looking maybe at 500% above their entry. So they're looking into the future while we are looking into the end of the trading day. That's pretty much the outlook for us. And the intraday range, that's an indicator that we discussed many times already in these videos, in this series, is above 5%. Remember, we have another screen where we want the trading range to be above 10%, but that's a bit acute. So on that list we have, if you remember quite right, 12 stocks. In this list, way more trading candidates. Okay, so we have those trading candidates. Let's find a trade. Where should we go first? With the SMMT, this is the stock SMMT, or with SBET, or with Irene, or AOI, or SEDG, or TripAdvisor, and so on and so forth. So let's say that you are a novice, you don't know which one to pick, and you can sort them according to volume, which is a great idea. Let's sort them according to volume, and the IRBN, Irene, that's the name of the company, sorry. Yeah, Irene, I don't know why I called it IRBN. Irene is the first in line with a volume of 42 million shares, up 7%. Let's press the button and see the intraday chart. So that's the intraday chart of Irene at 1 p.m. Okay, what is the trend in Irene? Obviously the stock is up 7%. You can see it here posted, and now the stock is moving sideways. What can you do? Keep in mind, guys, we want to trade with the trend of the stock. Okay, so if the trend of the stock is up, we're not going to guess that it's going to turn around and move lower. We don't want to trade with buying a breakout. What is a breakout? This is the first time I'm using this terminology. A breakout is buying the highs of the day. So buying a trade over the highs of the day. So buying, in this case, over 1855 or 1854. That's something that we don't want to do. We want to pay cheap for a good stock. So we want to see a stock moving higher, pulling back, and then giving us an opportunity to buy cheap. Not while it's downtrending though. So now you can see that this stock, in this case Irene, starts to flatten out. And now we're thinking, and you can agree or not, but just listen. The stock is now bottoming at this price level, which is, let's call it, in this case, 1650. So I'm going to take a trade long and use 1650. You can see, actually it's 1660, my mistake. So it's 1660 as my stop loss. And I will enter the trade above this mini resistance, which is 1690. So in this case, I will use 1660 as stop loss, 1690 as the entry. The risk will be 30 cents. Okay, let's say you agree with me. The risk is 30 cents. And how many shares should I buy? 50 shares, 1,000 shares, 5,000 shares. That's open to debate. If you have a big account, maybe you want to trade more. If you have a small account, you trade less. Let's translate this risk to percentages. Then it will be easier to understand. If 17, let's round things up. If $17 is the price of this stock, 17 cents is 1%. And if the stop loss is 30 cents, that means nearly 2% of risk. So if I'm taking a $10,000 position, which in this case is pretty much like 700, or we'll figure it out in a minute. I will risk, if my position is $10,000, 2% is $200. Are you okay with that assumption? You want to risk $200 on this trade idea? Let's say you do. In this case, I'm buying at 1690 and I'm placing my stop loss at 1664. That's 25 cents of risk. Let's call it 2%. In this case, it's actually 1.5%, but it doesn't matter. I'm just, rounding things up and making things clear. So if you buy a $10,000 position, and how much is $10,000 divided by 17? I will calculate in a minute. 10,000 divided by 17 equal 588 shares. We buy 600 shares. So we buy 600 shares and we risk altogether $200. That's if this is a trade that is to our feeling. Maybe 2% is too much risk and we want to look for a trade where we can risk only 1%. Because this is the first trade that came under our eyes. Is it the best trade? Who knows? Probably it's not. Okay, we have for 16 stocks in the list. Highly unlikely that this is the best mover. What is the risk? We already assumed the risk will be 25 cents. What is the target of the trade? And this is now getting important. Because on paper, the target of each trade is at least the highs of the day. So if the stock is trading now at 1680, highs of the day are, as you can see here, let me bring in the highs, 1850. So that's 70 cents. So my target is 70 cents and I'm risking 25 cents. Let's call it 75 cents versus 25 cents. So I have a risk reward of 3-to-1, or reward risk of 3-to-1. Okay, so that sounds actually good on paper. The stock is up and it can reverse higher. And if it doesn't do it, worst case scenario, I'm going to lose my $200 in this case. So that's how I'm starting to build trade ideas. Let's look at another stock. In this case, one that I already compiled for you. Let's take a look at Circle. Sorry, not Circle. Where is this one that? Okay, this one that we already talked about. This is AAOI, Applied Optoelectronics. Now, what happened here? Look, I'm looking at the chart. It's pretty early in the morning, and I'm seeing this. Let's call it bull flag formation, where 28 is the entry and 27.77 is my stop loss. And the risk here is less than 28 cents, meaning the risk is, or my stop loss is less than 1%. So if I'm taking $10,000 positions, that's a risk of $100. If I'm taking a risk of $20,000 position, that's a risk of $200. And if I'm taking a $50,000 position, that's a risk of $500. And this is open to you guys. You make the decision. How many shares you want to buy? If it is a $10,000 position, it's around 400 shares. If it is $20,000, it's 800 shares, and so long and so forth. And we multiply. So again, and we're trading. You remember, we're trading stocks that are trading prime volume. It's possible that at this time in the morning at 10:30, this stock is not trading 5 million shares, and maybe it's not on the list. Okay, I'm just making the assumption that it is. And let's because right now the idea is that we are looking at stocks and we want to analyze the risk. And once we analyze the risk and make the decision, we can decide if we want to buy. And if we want to buy, how much to buy? $10,000, $20,000, maybe $50,000 or $5,000. It's up to you. So this is scalable and very, very flexible. So if you look at each trade as percentage risk versus percentage target, and this is why we're trading those stocks, because we want them to reach a 5% intraday. Why are we trading basically a stock as a day trader? To reach 0.5% intraday? No, this is not why we are here. We want to trade those stocks that have the biggest chance of making it to 3%, 5%. How much this trade gained for us? So it went from 28 to 31. That's $3. How much is $3 on a $28 stock? That's 10%. So the stock reached a 10% target in let's see from 10:30 to less than 11:30. So in 45 minutes, the stock went up 10%. Is this a good trade? I think that everybody here that's looking at this idea thinks, yeah, it is a very good trade. Let's see another example, which is also drafted on the chart. Here we have a stock, Corewave, and you can see the potential entry, which is a breakout over the highs of the day. I just drafted it, but there are plenty of better entries here. Not plenty, but there are better entries. So we enter the stock at 158, and the stop loss is 156. That's a $2 risk, which is a little bit more than 1% on this stock. But let's assume that we want to take the risk, and let's call it 1.5%. So we're going to buy a position of $10,000. The risk will be $150. And how many shares are we going to buy with $10,000 here? Maybe 600 or 65, or let's call it 70 shares. Okay, so we're buying 70 shares. The value of the package is, in this case, $10,000. The risk is 1.5%, meaning $150, and the stock moves up 5%. Can you sell it at the highs of the day? Sometimes you can, most of the time you won't. Okay, we're not going to talk about trade management right now. We're going to just talk about how we position a trade, how we look at the entry point and the risk. And this is super important for us as day traders. We have to be very stingy with our risk, because we cannot control the reward. We're buying and then we're not doing basically anything after we're entering the position. We're letting the market, or in this case the institutional traders, take care of CRWV. So CRWV is moving up $158 to $168, not because we bought 55 shares. It's moving up because institutional traders are piling in. They're hungry for this stock for whatever reason, and that's fine. And this is basically now the concept that we're going to work around in our next 2 or 3 videos, finding the entry points, finding the risk, and letting a stock that we believe in, because it's in our watch list, run. And then we'll talk, of course, about trade management. Okay, guys, again, please like, subscribe, and see you in our next video.